Hi, welcome to this week's video blog at MonsterMortgage.ca. My name is Christian Harris. This week we're going to talk a little bit about rentals, investment properties. In the past we've had many clients out there who have owned more than one property, i.e. the principal resident, maybe 1, 2, 3, numerous investment properties. And in the past it was a lot easier to get financing on these, and you can probably see the theme of a lot of these blogs about how in the past things were easier than they are today. And these are just one of the many changes that banks are looking at, how they sort of underwrite this. And in the past they would use terminology like rental offset, and not a lot of lenders, but we had a few lenders out there who would basically look at your property, and for example, let's say you had $1,000 a month of expense between the mortgage, insurance, and taxes on that property, and let's say your rental income on that, and the lenders typically used about 75% of your actual rental income. So let's say you garnished $1,000 a month in rent, they would use $750 of that towards the rent and take the difference of $1,000 and $750, which is now minus $250, and that would be put into your total debt service, your TDS, and then they would see what you would qualify for with that in your total debt service. And again, this number can go up to 44%, and then you would just carry on with your new mortgage. Well, most lenders now, actually all lenders now, are not doing that anymore. Essentially what they're doing is if you have your principal resident and how many investments you have, investment mortgages you have, they're adding them all up and basically saying, will you qualify for this if we only use 50% of the rental income on that? So instead of doing a rental offset where they take a shortfall of a couple $100s and put it into your total debt service, they're now saying that you must qualify to carry all of these mortgages with only using 50% of the rent. And in most cases that's causing a problem because it's not realistic, because when you have a rental property you don't factor in 50% of the rent, you factor in 100%. Lenders only use 50% for qualifying. So just another example of things are getting a bit more tricky out there. It just means that, again, more due diligence is needed up front before you purchase or get into any investment opportunity. So speak to your broker ahead of time. Thank you.